What is up, and welcome to Market Monsters, Episode 1. I'm your host, Major Trades, and in this series, we break down and study legendary stock market winners to find the clues they leave behind so we can spot the next move before it happens. Today is May 20th, 2026, and the stock we'll be looking into is Super Micro Computer, ticker symbol SMCI, and more specifically, the run it went on from January of 2024. To set the stage a little bit, this is a company that is related to the AI space and the AI trade. So SMCI was an established company prior to its run, but the actual trade itself was in a hot sector, which kind of led this stock to go on a crazy little tear here. And so with that behind us, we can go ahead and move into the chart here. So I have the chart pulled up from basically when this thing started to base out, which was at the beginning of August, was when it kind of hit a top here and we started to build this nice base. The actual breakout wasn't until January. So you have about an 8-month basing period for the stock before it ends up going on its break and running. And this one ended up running roughly 200% in just about 26 days, which is absolutely asinine. These are the trades we want to be in. These are the trades that are going to give you that alpha immediately. You're immediately in the money and you're immediately in a profit. And so with this one, as you can see, it's going to look a lot like all the other stocks that we trade because it's a guaranteed. I shouldn't say guaranteed. It is a reputable and repeatable setup that happens to a lot of these stocks. And the reason before that is because what a stock chart is telling you is it's telling you historical data, right? It can't lie to you. It can't fake the numbers. What it's telling you, the price action is saying that buyers and sellers met at this price at this time on this day. And so we have this stock that basically runs up. So you have a run up into the all-time high here, and it builds out this base, and it's just putting in these lows. You finally see this thing to start putting higher lows, and really your interest shouldn't be peaked in this stock until this portion here. So you should be following this company because it's a leading company, it's in a leading sector, and then this thing is at all-time highs, and you start to build this base. And then this here is where your tingly senses should be going off. This thing starts to pull back after hitting this all-time high, and as you can see here on the volume, you get a nice little volume contraction from January 9th through the 11th until this breakout day. And I could pull up the S&P and look, but I already have looked at this one, and the S&P on this day is actually breaking to new highs. And so a lot of times you'll see that with these companies is you'll have relative strength with these guys, and as the market finally gets out of the way for these stocks, that's when they go on their tear. And so this one ended up breaking out on this day here, which was January 19th. And one thing you'll notice with these companies is there's a clear breakout, right? This thing is up 21% in a single day. That bar is a wide range expanding bullish bar. You're basically filling this thing up. The volume is absolutely massive on this one. The average volume is somewhere around here, probably around 25, 30 million. And on that breakout day, we traded 231 million. So what's that? That's a 10x volume of what this thing normally trades. Absolutely massive. And as you can see, after this breakout, the stock never looks back. The stock immediately is putting in new highs and running and running and running, and the volume is there. The buying pressure is there. Coming prior to this, the company has beat earnings, every single earnings report, I think 5 quarters before at least. It's coming off strength, and then you get an earnings beat here after the run, just a few days after the run. But you can't be scared of that going into the run. You have to weigh everything accordingly, but sometimes you might not want to take these trades because of the earnings report. But you have to understand, when you're in a hot sector and the market is rewarding these companies, as long as you're not on the tail end of that, a lot of times these things can rip off of the earnings report as well. And so you have a estimate beat on EPS as well as a top line revenue beat, and one of the big things was their guidance was absolutely astronomical. Revenue was up 103% year over year, and they're guided for 14.5 billion for that year in total. And so when it comes to looking at these companies and what things to look for, like I said, you're coming off of previous strength. So this stock is coming off of a run to begin with, and it's in a hot sector. You have strong earnings beats in past quarters, and it's still continuing to guide strong. It's building out this base over a generally longer period of time. I always like to start down from a weekly time frame and then hammer down in the daily. So this is a daily time frame here, but you can see it's not a quick little rip. This thing has built a base. The shareholders are buying up the company, and that demand is slowly coming to market. Supply is slowly getting pulled away from market until you get that break and price has to go higher. This thing is tightening up and putting in higher lows on the right side of this cup. and you're going to see this thing get nice and tight before this breakout, and this pullback has low volume and the breakout has strong volume. The breakout is clear as day. You know, there's no questioning whether or not this thing wants to move higher. This thing, like I said, I think it was up 20% in one day when the average true range is only 5%, and the stock does not look back, and it overall goes on a nice tear there, and you can just trail that stop. But those are some things we generally look for in these companies. Is we want to see that strong relative strength to the market. You want to see this thing build out a base. All-time high is key. You know, there's no more overhead supply once you get through that level. And then you can look at these small things like the volume contraction as well as the volume breakout when these institutions are buying this thing up, because that is what you're seeing here. You're seeing, like I said, data points on the price action, which is coming from institutions, because you don't get these kind of moves from retail traders. That's all for today's episode of Market Monsters. Thank you for watching, and I hope you enjoyed. If you found this video valuable, please leave a like, comment, and subscribe if you haven't already. And Major Trades signing off. Until next time, peace.